Hi guys, it's Ryan here from leprivatebanker.com. I'm just going to do a quick recap for crude oil today and what I saw on the day. So I've done the recap for a week or so now, so I'll start from the higher time frames. We'll start with the monthly in this occasion. So if we look at the monthly bars, we can see that we're actually at the top of a bracket here, and we have these two excesses from this previous high from last year into the sort of $110, $111 a barrel area. You can also see here that we're in a massive coil consolidation wedge here, and we are currently trying to break out of this wedge. So if we do break out of this wedge, then we start to test, we will come and test these high levels, these references above into the 120, 114, and the $111 a barrel. We are coming to a new month's end, so on Monday or Tuesday next week we have a new month. So things I'm looking at here is how we are going to close out this month. I mean, are we going to close this month out with excess, or we're going to close this month out with a strong bullish finish to this month? Obviously this is key to a month in the auction that we're currently in. I mean, we're in one time framing up since the beginning of the year, and obviously we've seen a pretty big dislocation here. I mean, you can see that we were just grinding high, grinding high, grinding high, and you can just see here we've seen this dislocation. So I mean, just something to keep heads up with here. I mean, we're going to find sellers into the end of this month, and then we're going to see sort of a reversion back down to the sort of $100 a barrel area, first of off the 102, or are we going to finish this month strongly, and we're going to see a breakaway and a test of last year's high. So that's just a heads up on the monthly time frame. If we then zoom in, we start to look at the weekly time frame. We can see that on this time frame we've started to break out of this wedge now. I mean, I've drawn it a little bit different. I mean, I did have it anchored from these lows before, but even still then you can see that we are trying to break out of this. We have broken out of this wedge. I mean, we're now referencing the low of it. So just another heads up. So we've seen 1, 2, 3, 4 weeks of one time framing. We came down and tested the low today in the RTH trade, and we found responsive buyers today, and we auctioned higher. So this is the weekly time frame and the current confluence and context that we're looking at. I'm now going to just start going through the daytime frame charts and start off with the daily, I suppose. And you can see here that on the daily RTH pit trade, we see this lower bracket forming, and we tried to break out, and whatever, we see balance come into the market, and then we eventually just see responsive buying, strong buying came in once the moving averages caught up, and we see a big dislocation here through $104 to $105 a barrel. And since then we've seen a 10-day balance up here. I mean, 1, 2, 3, 4, 5, 6, 7, 8. There's 10 days. Today was the 10th day we've spent in this trading range. And we've put in a substantial amount of volume up here. I mean, if we quickly look at the let's just look at the quarterly, you can see the dislocation here in the Globex, and there's nothing was traded. And since then we've just been holding this these upper prices, putting in some firm distribution up here. So there's clearly an acceptance and agreement of prices up here. Otherwise we would have found sellers and we would have auctioned back down. So at the minute, the longer time frame sellers and buyers are in agreement. Otherwise we wouldn't have seen two-way trade in the market auction up here, putting in this much volume. So that's just a heads up that we're possibly going to obviously auction higher here until we see an excess. We currently don't have any excess in the RTH, and the current year high was put in the Globex session, so this is another heads up that we have business to be done still. But again, last year we put the year high in the Globex session into a sort of new spike, so that also needs cleaning up as well into the $110, $111 a barrel. So there's a lot of confluence to come back to the $110, $111 a barrel area at the minute. But as you can see here, we've got this mini sort of balance here, and then we sort of broke out, and we tried to break out this bracket. So this is the correct way to draw this bracket. We have this bracket, and we can also just put a little bit lower here, and you can see that on this day we tried to break out, and we opened up above the bracket high, we auctioned inside, we found buyers, we tried to break out. We closed out with a pretty bullish candle, and there wasn't much excess. The next day we came back in, and we tried to auction higher. And what we ended up doing was closing inside the bracket. And the next day you can see how we start to reference this bracket high again. So this is the correct way to draw this bracket. This is not the correct way. The correct way to draw this bracket at the moment is like this. So that's just a little quick observation for some of you guys. This is the correct way this bracket should be drawn. until we break out. Obviously this is going to be overhead support in a minute into the 106.94, but just a quick heads up on that. So today we started to see one time framing down, so we've seen 3 days of one time framing down today. Today we took out the one time framing as we broke yesterday's high. So two-way trade balance back into the market if you're using that as a directional filter for the sell side. But today we open up pretty much inside of yesterday's range, and we'll start. I'll just zoom back into the TPOs now. So we opened up inside of yesterday's range. Nothing to do here. I'm going to bring the composite into play here now. So this is the current composites that I'm tracking. So we have this distribution here, then we open gap up and we try to break out, and we auction down for 3 days. So I'll put this as another distribution. You can join these together. I am monitoring everything at the moment. I do also have this joined together as well, but I mean, just for my intraday trading and the stuff that I'm monitoring, this is what I'm looking at. So today we opened up inside of that previous value area, inside the previous day's range, in the middle of this bracket. There's just no edge here. There's no reason to trade this market in a minute. We have to test an extreme. So what I basically did was I just waited. So in A period there was nothing to do. The initial balance came in, nothing to do. And in B period what I see is market making activity. So market makers, they came down and price just auctioned down to where there was business to be done. I mean, there was no buyers here, so where does the market do? It sells off. So the market auctioned down to the edge of this current extreme. We tested yesterday's low of day, and we tested some high time frame confluence. So the 5 exponential moving average has caught up with price now. So the next moving average is the 10 and the 20. So we auctioned down to the 10 moving average, and we referenced the current bracket lows. We also have a clear two-way trade in this market on the weekly time frame, and we come down to last week's value area low, and we also have confluence here that we've seen in the market, and the current 1.5 standard deviation for this week. So when the market is rotational like this, the expectation is for the market to gravitate back to the mean until we see change. So once we break out and the market becomes imbalanced, then we can look for an imbalance to form, we look to sell the market. But once there's two-way trade in the market, like we're seeing, the expectations is reversion to the mean. So I was looking for reversions back to 106.30 across the board today, because if we look at all of the distributions at the minute, the mean price is 130. So if we open higher, reversion to the mean 130. If we open lower, reversion to the mean 130. Until we see the next directional move away from this bracket two-way trade area, that's what I look for, reversions to the mean. So today, like I said, we opened up in the middle. There's nothing to do. So what do? I wait for the market to sell off into the area that I'm interested. So I was waiting for yesterday's low of day. So in B period, we see a spike down to yesterday's low of day, and I was basically looking for buyers to here. If we didn't find buyers here, then we were most likely going to try auction down to the 105.14s and potentially fill this gap that's in play here. And that's when we would have seen change. But we didn't. With market auction down before crude oil inventory. So this was quite a tricky trade to take. I mean, I don't like fading these half-hour elongated bars, but with regards to structural references in the market and market structure, this was a valid trade for me. So once we auctioned down to yesterday's low of day, right here, this is where I was looking to get into the market. So I started to get filled, and my position was I scaled into my position. So my core average was into 105.65s. That's where my core average ended up getting filled. I mean, I just layered in from 70s down to 60s, and that's where I got filled. So I managed to get scaled out back into the Globex Vwap and into the crude oil inventories. My major concern is that the imbalance on the crude oil the overnight trade that you can see here, and the fact we had crude oil inventories. So I basically just scaled everything out into crude oil inventories, and I held the minimum size with a stop below the current day's lows. And what we see here into the crude oil inventories release is we see the spike up as buyers came in, and we tested the previous day's value area low and the developing value area low, and we just see this spike down. And I ended up basically just closing my position on this spike, and I looked to re-establish a long position, and I just missed it. I mean, the market sort of came in here, we hesitated for a couple of seconds, and we just took off. I didn't even get time to try and get filled here, and I ended up missing the rest of this move up. I mean, I was pretty gutted, but I mean, once this move happened and I missed it, I mean, there's nothing really to do. I mean, we're back into the mean, we're back into the mean price, and there's just no edge in trade in this, because we easily could have come down and tested the developer value area low. So my next trade I was looking for was into the 105.80s, but we just never come down there. If we do run a meters VWAP from here, let me just add on quickly. If we do run a meters VWAP from here, we can see that there was confluence at this mean, and we can see this algorithm coming here. The market bid up, and you can see the imbalance, and then the market came back in for the mean reversion from this VWAP. Response to buyers again. You can see how this VWAP, this algorithm's in play here, buying the value area higher. Final push in into the close, and then we see the spike higher. But so you could have got long here if you were aggressive from the point of control from yesterday. But from what I was looking at, I was looking for a possible retracement back to the 105.84s, but we just never see it, and I wasn't really willing to take this trade, so I ended up just missing all this move. I mean, this was a profitable trade for me. I did bank obviously some scale outs. I took minimal. I pretty much just got out on my entry on this spike down, so I mean I managed to get my 2/3 out, so I did make some profit on this trade for on the day, but I just ended up missing the move that I was looking for. The main move I was looking for was a reversion back to 106.30s, like I said in the chat box today on the website. And once this has been accomplished, I mean, to me, the market sort of completed what I was looking for it to do, and there wasn't really much to do until the rest of the day if I wasn't positioned. I mean, if I was positioned, I would have left a runner on, and I would have targeted the previous higher days, but in that position I'm not going to be fully exposed and risk my account by getting in these locations. I mean, there was just no edge there. I mean, the main thing that was holding me up was the fact that we was just sitting at the into the monthly mean, and so there's no extreme there, and obviously back up to the value area higher and the value from last week and this week. And the major confluence was the fact that we were just sitting at the value area high for this week. So I mean, once we see the reversion back to the sort of 30s, like I said, we're just into this month's value area high. So until we break it, and then I can start to lean off the value area higher, then there's just no edge for me in this trade, because sellers could easily have come in here and seen reversions back down. So I just, like I said, I wasn't willing to. For me, there was just no edge there anymore, so I didn't trade. There's no point forcing things. As you can see here, we have seen some pretty crazy activity. I mean, we see a gap up on the Sunday night open, and we basically see an instant sell-off back down to the half standard deviation, and from there we found some more buy-in, and then on the Globex open last night, we just literally opened gap up and spiked up again, and then we just see this move back down. It's just a lot of market making activity in the market at the minute, it seems, and as you can see more easily on these volume bars, you can see this crazy activity that they're doing here. I mean, they offer the open on the Globex open, they sold all the way down to 105.24s quite quickly, and then yesterday we opened gap up on the Globex open, and we see this big spike up into a new year high on the back adjusted contract into the 107.49, sorry, and then they sold off all night back down to the distribution low of the current upper balance 10-day balance, and then obviously we see buyers off the open into the second, third period today after the inventories came out. So quite a tricky market to trade at the minute, and I'm pretty frustrated I couldn't catch that move today that I was expecting to happen, but I was just a bit premature. Realistically, I should have waited for crude oil inventories to come out, and then what I would have done is obviously look to buy this buy below that B period once it's all played out. I mean, what I should have done is just hit the bid, lifted the offer aggressively once we come back into value here, but in real time that was quite a hard thing to do after I'd already exited my trade and I was looking for a bit more information. And obviously you can see the volatility really pick up here. I mean, this happened very fast, and you didn't really have much time to react on this, and I ended up missing it. No big deal. It's not a big deal. As you can see here, we did come down and we did test the quarterly 1.5 standard deviation again, so that's another reference to start leaning off of. And we can see here in the footprint today that what I was looking for. So this was the first area that I faded. So and we did leave an incomplete auction there. So we came down and we tested below that previous low of day. I see accumulation coming in. We can see clear buying absorption. I see delta divergence. I'm just going to quickly change this because I'm not using 30-minute bars at the minute. I'm currently using some the Renko bars again. I mean, I was just using the 30-minute bars previously, just as a trial test. Always changing, always adapting, always looking for new edges. That's trading. So anyway, this is what I was looking at. So you can see the delta divergence coming in here clearly, and you can clearly see the accumulation. We just sold off, there was nothing here, and then buyers started coming in, absorbing all the sellers. Once that came in, I established my long position, got scaled. Inventories came out, we blasted down that last time, more accumulation coming in, cleaned that incomplete auction up, tested the half standard deviation, and then after that we literally just ripped. I mean, this was here, this is where I literally could have just lifted the offer as we came back into value, but it just happened very fast, and I just missed it. So like I said, there's no point chasing the market. This is my second opportunity to get in here, but I just missed. I just decided not to trade this afterwards. Anyway, that's just what I see on the day here. I'm just going to quickly go through one more thing. I mean, this is the 240-minute candle bars, and again, there was more confidence on this trade today that you could have leaned off of, and this is value on the current bullish channel that we're in. So this is the bull channel that we're currently in, and this is value. So this is the mean, and this is the value. First standard deviation, second standard deviation, first standard deviation. And as you can see, we came down, we tested the first standard deviation, and we're looking for a reversion back to the mean here. But you can clearly see this bracket, two-way trade in the market, and these are the extremes you can lean off. So again, today we opened in the middle of it, nothing to do, wait for the extreme. Anyway, if you have any questions, please email me at contact@leprivatebanker.com. If you're already a member of the forum, then please just ask me a question on the forum, and I'll get back to you ASAP as I do. And I'll catch you all tomorrow. Take care, and goodbye.